Good afternoon, everyone. It is Sunday, the 3rd of April, and this is Christopher Aaron. We are going to look at the precious metals over the last week and a half. I was not able to do the update on Wednesday, and so we'll update everything as far as how these long-term bottoms are shaping across both gold and silver. All the signs still indicate that we are looking at significant long-term bottoms from my analysis. And on Wednesday, I just wanted to mention this briefly. I was at a conference. It was unrelated to precious metals. It was actually related to another topic that I am increasingly vocal about, which is my experience in the wars in Afghanistan and Iraq. For those who don't know, I'll just share this because eventually you're going to see some stuff about it anyway on other places around the internet. For the first part of my career, I was working in the U.S. intelligence community, which included 2 years at the CIA working for the Predator drone program. And while I was there, as I said, I spent time overseas, and I really had my eyes opened as to some of the operational and strategic errors, some of the faults that I saw within the program as to how we were going about our operations there. And I came to the conclusion through studying this with my own eyes that we were actually probably causing things to be worse off in the long run as far as security in both of these countries goes. And so this is something that I have begun to speak about at some other conferences. There is a link between gold and the precious metals and war as far as my study of history and current events goes. So I actually have written an article about that to kind of explain to people how I arrived at this point or how I see that link between precious metals and war as we see it in the current wars that the West and NATO are participating in. Now, this channel is not meant to become a political channel. I focus on the precious metals on this channel because I really wanted to share my perspective as to what I saw developing in the metals. So I don't intend for this to become a place to get into debates or anything like that. I just wanted to share that I am participating in some of these conferences increasingly these days, and so there will be these times that I'm unable to do the videos, or in which you perhaps see in some other forums some of the perspective that I had from my own experience being overseas. So thank you for understanding that and for sticking with me, and let's get right into looking at gold and silver. Okay, so getting back into gold here, briefly looking at the 3 days. That dip on Friday taking us to right below 12.10 per ounce before a decent recovery by the end of the day. So keep this 12.10, let's call it 12.08 figure in mind when we look at the 1 year perspective. Of course, here, let's first put that into the bigger picture context, and let's remember that we are talking about a market that has broken out of its primary downtrend here, and that is now coming back into this 1200 region to retest that downtrend, also corresponding with the October 2015 high. So we're seeing that right now, that retest. Very nice looking technical action thus far. As we zoom this in, we will see it even closer. Now, what I said from when we looked at the 3-day chart, we had that low right around 12.08, making that a slightly higher low than we saw a few days prior at about 12.05. So there is a chance that this retest has already occurred. As we see here, looking out of the December lows, the price rising significantly up to about 12.85. Before coming back now, let's call it $80 to that 12.05 level. Still a minor correction in the grand scheme of things, but looking very nice as we come into this expected retest level here, this green zone, which again corresponds with the October high, which is now a support zone, and the retest of this broken downtrend. So we'll have a very strong signal that the retest has occurred when this broken line here, when this short-term line is shown in the teal color right over here, is broken to the upside. We'll be looking at this to say, okay, valid retest. Briefly looking at the gold mining complex in relationship, this is especially for my premium subscribers. We are looking at what is still a very nice consolidation here. If you notice, these highs are still inching up ever so slightly. These lows on the GDX fund. The highs are coming down, so that's kind of the textbook definition of a consolidation. And what's notable is that the GDX, the gold and silver miners, are consolidating even as we had seen gold moving lower. So since the gold mining complex tends to be a leading indicator for the metals itself, we are looking at this as a positive leading indicator sign that the sector is not going to collapse to new lows. That the low for the bear market was put into place last December. So just looking at this action here across the gold mining complex a little more, we have this really well-defined up-down. I mean, these are 10%, 7, 8% moves that are happening every couple days. So this is extremely volatile. There was an article recently written in Bloomberg talking about how this sector has gotten so volatile that even as the prices of gold miners have risen, that funds have actually been flowing out of the gold mining ETFs, such as GDX, because people can't handle the volatility. So that's what we need to expect in this sector going forward. Right now, thus far, everything looks pretty good here on this consolidation. And of course, if this breaks to the downside, we're going to be looking at roughly a 10 to 15% move down to this strong support level coinciding with the October high, which should hold prices, barring a complete collapse, which I do not anticipate right now. So this consolidation is looking good here. This could go on for another couple of months even though some of our positions are going to be moving higher even in a consolidation. Moving that back down just so we can see the comparison again. So we saw the GDX consolidating like this, and we see gold moving lower. So that's where we're talking about that outperformance of the gold miners, at least on a relative basis, for the month of March. Okay, so let's turn our attention to silver. Showing on Friday the same kind of weakness as gold, and breaking below $15. Now, what's very clear to see here is that silver basically bumped right against the same resistance that we were looking at here in October, right below that 1625 region that we were talking about. That was a couple of weeks ago. And back then I said that the trajectory here was shaping up for one of two possibilities. One was that we were going to see this break above that high from October sooner, and then we would probably look to have another challenge of the $18 level, which corresponds to this high from 2015. Or the other option was that we would back off right now and continue to consolidate somewhere in this region of, let's call it $14.50 to just above $16. And so we can see which one of those happened. Now, it was the backing off. So all signs right now are indicating to me that silver is going to continue to consolidate below 1625 for some time. This could be through the rest of the spring and perhaps coinciding with the seasonally strong season in August, September, October for the precious metals, that we might see finally this break above 1625. Now, if you can see what's developing here, I'm going to cover up this trajectory that has basically not worked out, put a little patch over there, and we can see the trajectory that looks most likely when you take into account that this downtrend line here has been broken decisively now. There's no way that you cannot see this break from this downtrend that had been forming for about 3 years. So we see that break. We also look at the early indicators from the mining complex. We did not look at Silver Wheaton today, but I will say briefly that the valuation of that company is still significantly above where it was in October. So another leading indicator there for silver. So if we're looking at this, perhaps consolidating for the rest of the spring and the summer, what is going to be shaping up here is this pattern. Can you see this? We had this dip here for about 3 or 4 months. Then we had about another 4-month dip. And then it's shaping up for about another 4-month dip. So with this central dip being slightly lower, if everything goes according to plan, than these 2 side dips, this is what we call in technical analysis an inverse head and shoulders pattern. The shoulder forming right here, the head forming right here, and right now currently it looks like we are forming the last shoulder for silver. Now, all in all, this head and shoulders pattern will take roughly about a year to play out with prices below the 1625 level. And then, of course, we'll be looking at a challenge of 1825, which might not break right away. This might have to back off from 18 again and not break above 18 until sometime in 2017. So all in all, we'll be looking at something like a 2 to 3 year basing pattern between 14 and 18. So a very long grinding basing pattern that will basically wear people out, make most people disinterested, especially if gold continues to move higher, let's say above 1285 at some point in the next couple months, and silver still fails to break 16. That could very well happen. And, you know, there's this fallacy out there that is being written about in all sorts of newspapers and other sites where people are saying, well, gold is not being confirmed by silver. Gold's move is not being confirmed by silver, therefore it's a false move. And I hate to bring it to people, but these analysts or these reporters are just not studying history, because you can go back and look at the move out of the 2008 low, especially breaking in 2010 for the final run higher. You can look at that move. You can also look at the move from 2001 in gold, where gold began to move out of its low from 2001 to 2003, and silver didn't move until basically 2003. So it lagged for about a year and a half, almost 2 years. So silver absolutely does lag for periods of time like we're seeing, but that does not negate the move that is setting up in gold, nor eventually in silver. It's just part of the deal with silver that it lags until it's ready to play catch up with a vengeance. So looking at this from the standpoint of this potential head and shoulders pattern developed, this looks like the most likely pattern for me at this time, based on all those early warning indicator signals that we have spoken about. Of course, still looking down here at silver basically since November of 2014, outperforming the rest of the commodity complex. This is exactly the same type of outperformance that we saw in gold before it made its significant move in January and February. So this is sort of this is like a third leading indicator here for silver. All in all, though, it's probably going to be frustrating, and most people will not be interested in silver at all at these prices, because it's too grinding and it's wearing people out. That's basically what you can see. So if you have a long-term time horizon, I would suggest that we're probably about 2/3 of the way through this move below $16. Maybe there's another 3 or 6 or 7 months left below that price level. So it's probably a good time to continue accumulating either silver or silver mining equities, depending on your preference. And just don't let it frustrate you, even if we see a move back down to 1450 or so. The executive summary: gold retesting 1185 to 1200, breakout zone from this primary downtrend. Silver showing it wants to consolidate for more time below 1625. Perhaps that will last through the end of the summer. And we are looking at the leading indicators still for both metals across the mining sector. And of course, that is some of the focus for my premium service and the iGold Power free channel that is out there for people who are doing that research for themselves. Thank you very much for sticking with me again. The next update will be on Wednesday, back to our normal schedule, as I will be in town. And so we'll take a look at the half week's action on Wednesday. Thank you and have a nice evening.